All right, ladies and gentlemen, not good evening. You guys still have around about lunchtime. So hello and welcome to Nadex. Thank you very much for sacrificing your lunchtime to stay with me today. My name is Philip and I will be a presenter for today's webinar. We want to have a look at strategies for today's oil and gold markets. Just a little bit of intro and then a lot of market focus. And as usual, if you have any questions, please let me know those questions. Put those questions directly into the questions box, and I'll do my very best to answer those questions as we move through the webinar. Right now, I would appreciate a very short yes or why to just let me know that both the audio and the screencast are working properly. Perfect. Thank you very much, everybody. Linda, George, Robert, thank you. Perfect. Really appreciate it. Today's webinar is scheduled to run for about half an hour. However, after this half an hour, that's the core part. If you have any questions later on, I'm more than happy to stay online and answer your questions. Have a look at different markets that we might not have had the time to cover during this half hour. So essentially this session, the core half an hour, and after that as much as you want to listen to me. All right, so before we get started, of course, we do have our usual risk disclaimers, so please take a moment to read through those carefully and make sure that you're okay with them. Essentially, this says that trading involves risk, and you should understand those risks and the instruments that you are using before you're getting active in the market. It's neither Traders Position nor myself are investment advisors. Nothing we say should be considered to be actual investment advice. All examples are shown for educational purpose only, especially during the live part. We will be looking at the markets. I will share with you what I'm seeing on those charts. And even if I say, I like this setup, this is just me. It's just educational purpose. It's never a trade recommendation. Especially also true when we look at suitable Nadex contracts that might be used for trading those setups. It's always just educational. Never a trade recommendation. So please make sure you're okay with that. And that being said, we do have another risk disclaimer from Nadex. Futures trading and options, of course, involve risk, which may result in financial loss and are not suitable for everyone. Any trade decisions that you may make are solely your own responsibility. The information presented in this webinar is for informational purpose only. The contents of this webinar are not an offer or solicitation of an offer to buy or sell any particular financial instruments offered on Nadex. Past performance is definitely not indicative of future results. That being said, let's have a look at today's agenda. Why trade commodities? Interesting markets, nice trending markets, and of course with our trading strategies here at Traders Position, we're always looking for trending markets, and commodities are just a natural fit for those. How can you take advantages of those opportunities? Once again, with Nadex, it's the Nadex advantage. What kind of products are available to be traded there, and what are the huge benefits of trading those products and considering them for implementing the trading strategies. Trading strategy. What is a trading strategy and why should you need one? Trading strategies for the commodity markets, and then core part for today, where's the meat? It's the live trading and analysis. And as always, if there are questions, please let me know. I like to answer those questions. I want you guys to learn something during this webinar. And for that reason, I think asking questions is a very vital part of the learning experience. So by all means, you're not disturbing me, you're not interrupting me. That's what we're here for. So please don't be shy. Why trade commodities? Well, commodities, fancy name, it's just natural goods. Can be agricultural products, or like main focus here today, it could be gold, it could be metals, it could be energies, and obviously as those products are being needed in a lot of different manufacturing processes, not just jewelry, but obviously car manufacturing and so on. There's a huge demand, and this huge demand is not always the same, it fluctuates. Demand and supply always changing, and therefore prices are changing. Metals and energies experience ever-changing swings in price due to forces of basic supply and demand, economic factors, political factors. Just think about India for a moment. Just in the last, I think it's now about 2 weeks ago, the government suddenly decided that one banknote is no longer valid, or maybe it could have been two. Those are no longer valid. And many people had those banknotes, and a lot of rush, a lot of panic, and immediate spike in gold price was the reaction, especially in India. Many people just rushed to their gold dealers and said, wait a minute, this paper isn't worth anything any longer, please give me gold. And those are those political factors. You might always think, come on, how often does this happen? It does happen, just, yeah, maybe 2 weeks ago. We are looking for volatility when it comes to trading. Volatility can create sustainable trends, which in turn can create potential opportunities. And commodities can form sustainable trends on a short intraday basis as well as over a longer swing trading basis. You pick your time frame that works for your trading and how you want to trade those markets. And there are suitable setups in the markets for those different time frames. And of course, there are also suitable Nadex contracts available to implement those strategies. Many people have that misperception and idea. You have to sit in front of your screen at least 12 hours per day. You have to watch 5-minute charts or 5-second charts in order to be successful as a trader. Absolutely not true. You decide how you want to trade, and you can make it work for you. Just looking at daily charts, perfectly fine, nothing wrong with that at all. Now, with those opportunities being presented in those markets, how can you really take advantage of those opportunities? Nadex gives you 2 different products of choice to implement those trading strategies. And those products of choice, of course, are binary options and spreads. And please, by all means, this is really just a very short and rough introduction. You can learn much more about those products here on Nadex, on the website, and of course during other webinars here at Nadex as well. So it's really very, very tight and more like a reminder recap if you already know that stuff. Binary options and spreads, both products have unique characteristics and can be used in different markets and for different purposes. So let's have a look at both of those very briefly. A binary option is really straightforward. It's a limited risk derivatives. You have a well-defined risk position. This means once you have opened that, or at the moment where you open your position, you know immediately what is my maximum risk. If the markets gap against you, if anything happens, you don't really have to care with those binaries because your maximum risk is known at that moment when you open your position for the very first time. Just a second. So this is a very, very big and huge advantage. You definitely I always call it no nasty surprises. So keep that in mind. All right. Next thing is they also offer a very intuitive way to trade the financial markets with relatively low collateral. If you want to be an active stock trader, especially in the United States, you have this pattern day trading rule, which essentially says as long as you don't have $25,000 in your stock trading account, you're pretty much limited to what and how you can trade. Futures accounts, you need to have a lot of money deposited there to use those futures. This entry barrier is much, much lower here with Nadex. It's quite easy to get started trading those Nadex contracts. Benefits, I already mentioned trading with strictly limited risk. I can't stress how powerful of a concept that is. Peace of mind and, yeah, no nasty surprises. We mentioned the low collateral required to trade. You have opportunities in volatile and in flat markets alike. Usually with our trend following strategies we want to see a trend. If this trend is not there, we have a hard time to implement it with futures, with stocks, with CFDs, with whatsoever. With binaries you can sell those contracts, you can make time work for you, and therefore clearly those sideways markets suddenly start to present you with opportunities. and of course multiple daily trading opportunities if you want to go for those lower time frames. Spreads are a little bit more complex, just a little bit. They are still fairly simple. They are a derivative with built-in floor and ceiling levels. And these levels define the lowest and the highest points at which that contract can settle. You can always know your maximum potential loss and maximum profit from the outset. And they are based, once again, on an underlying market such as a commodity. So if you want to trade a binary on oil, for example, or if you want to trade a spread on oil, doesn't really matter. Same markets are available here, same underlyings are available here for your trading. Those spreads are definitely suitable for retail traders looking for leverage and again for hedging opportunities. You can trade once again with strictly limited risk. You have here also low collateral required to trade, and you can take highly leveraged positions if it suits your risk profile. And once again, multiple daily trading opportunities setting up there. Now, I already mentioned you can trade those higher time frames, daily charts, 8-hour charts, 4-hour charts, stuff like that. Or you can say, no, it should be pretty fast. I'm living for the heat of the moment and the thrill of the battle, and 1 minute chart is already too slow for me. Doesn't matter how you want to trade, there are products available here for your trading. Longer time frames are being called swing trading. Day trading would refer to those shorter time frames. If you want to join the trend, if you want to fade ranges, doesn't matter. There's always a solid choice here with Nadex binary options and spreads available for your trading. Now, how do you trade those markets? I think it's always very important to point out, as cool as binary options and spreads here at Nadex are, they are just instruments. They are just a means to implement a trading strategy. You must have an idea what to look for when you're looking at those charts. And once you have that idea, then you can think about, okay, what would be the best way to trade that market? And here at Nadex, do I want to trade it via a binary, or do I want to have a look at a spread, for example? And for both of those instruments, what would be the proper strike prices? Or for the spread, of course, the floor and ceiling levels. So always, that's the second step. The first step always has to be, wait a minute, there's something in the market, there's an opportunity, I want to exploit that opportunity. And the instruments like binaries and spreads just give you the how. So you want to build a trading decision, and to build a trading decision we need to identify compelling reasons to enter the market. A trading strategy may combine multiple layers of technical and/or fundamental analysis. We always like to stack the odds in our favor, which means one reason is never enough for us to really just take a trade. Just because we see an uptrend does not mean we want to go along that market. We have a lot of check boxes with our rules, and we want to check all of those boxes. One reason is never enough, so multiple layers. And our strategy should be precise. It should tell us precisely when we want to enter, and we should also know when we want to get out. If we were to trade those markets with conventional instruments, we definitely would have to know about a stop loss location. Once again, nice thing, why are we using stop losses? In order to limit our downside. Well, limiting that downside is already built into those Nadex contracts by default, so we don't have to think about using stop losses. We still could close those positions early on and so incorporate stop loss levels, but we don't have to. And we need to have a plan to manage that trade and take our profits. Just a second. Chuck is asking a great question. Philip, you say spreads are a little bit more complex than binaries, but I've heard John Skelton tell us that beginners like me should start out with spread versus binaries. Help, thanks. No problem, you're welcome. In the end, I think it comes down to personal preferences. The idea I have with binaries is pretty much, but you know what? Jack, we will have a look at that on the live platform in just a moment, and then I can tell you my reasoning why I personally would start with binaries, but again, it's just personal preference. So by all means, stay with me for a moment on the live platform. We can discuss various options and why I think with spreads you have to juggle a little bit more in your head, but it's not a huge difference. Once you've understood both, pick that which works best for you, but more on that in just a moment. All right, so building a trading decision, second part. Each layer of analysis that we perform can help to build the probabilities of a successful trading outcome, stacking the odds in our favor. And you have to think, or you can think of that strategy as a set of rules that combines the technical analysis to represent a trader's edge. Defining the rules in advance can help us. We never want to make a decision once we are in the market, once we feel the heat of the market and once we are about to maybe lose money. Being pushed into that corner, you are not working at your best. Definitely not from, at least from an emotional perspective. And for that reason, we want to make clear, we want to have made all decisions, we want to have settled on everything before we raise that order. And this is what a trading strategy allows us to do. Now, the kind of technical analysis that we perform as a part of our trading strategy is we do not approach the market from the fundamental basis, especially with trading lower time frames. For those fast-paced, with Nadex you have the longer term contracts, but also those ultra short-term contracts, and their fundamental trading, for me, personally, it doesn't make any sense. And therefore, we are looking at charts. We think right now pretty much all information available should be in that chart. And so everybody looking at that chart should be on the same page. So what are we looking at on that chart? We're looking at optimal chart structure. We're looking at identifying price action and how this price action defines trends. And we use moving averages to help us to identify strong trends and pullbacks to areas of price equilibrium. Again, stacking the odds in our favor. We are not, just because the market is in an uptrend doesn't mean we want to buy it. We want to buy it when the price is right. You always have to negotiate in real life and of course with trading. And with trading it's called good trade location. And we use moving averages in that way that, that we are looking for finding opportunities in our moving average buy-sell zone for a good trade location. Candlesticks help us to understand what the market is doing right now, if the buyers are in control or if the sellers are currently dominating the markets. And very powerful true support and resistance, not sloping trend lines but flat horizontal lines, depending on the market, very, very powerful. And again, the leading indicator, you see those lines early on and you know that price probably will react to those levels. So a very simple rule, and you can learn way more about those strategies here at Nadex and our other webinars. First thing is to locate a chart with optimal chart structure. No nasty gaps, no nasty surprises. We only want to trade in the direction of the trend. We want to see a fanning pattern with our moving averages. We want to see the price pulled back to the moving average buy-sell zone. And then we're looking for a trigger candle, a small bearish, small bullish candle at that good trade location. And this is what creates the setup for us. Now, when it comes to trading that setup, you have to think about reward versus risk. And we like to have at least a 1-to-1 risk to reward ratio. The higher that ratio, usually the better. However, once again, we will see that when looking at those Nadex contracts, you have to balance things. You have to balance the probability that this will be a winning trade with the reward to risk ratio. If we can incorporate support and resistance levels, this would be just the icing on the cake, which could make that setup especially sweet and especially nice. So that's the big picture of how we approach those markets and what we want to see there. Live strategies for today's oil and gold markets. And so right now I would be switching over to my charting platform. If there are any questions at that point, let me know. And the idea here currently is to just, all right, here we are. And what we can see here on that chart is already crude oil. And let me make crude oil a little bit, okay. We see here a daily chart of crude oil, I see a weekly chart, and I see a monthly chart. And the big idea is always I want to have multiple time frames to be in agreement. Why? Because once again, that stacks the odds in my favor. And if the monthly chart is telling me oil is going up, and the weekly chart agrees, and the daily as well, as does the 8-hour, 4-hour, 2-hour, 1-hour chart, then probably I have a decent chance to find a quite strong setup on the 1-hour chart, because every time frame is pulling in that same direction. As long as I have that, could be a very nice setup. However, if all time frames show me something different, that market, at least it's not as predictable as in the other case. So that's the main idea, want to see multiple time frames. On the monthly chart, clear move lower, and then a sideways phase. The sideways phase was rising higher lows. Let's make the weekly chart a fair bit larger here. And what we can see here on that weekly chart, and make it larger once again, is that price has been stuck here in that range. Now, that could be a range. The usual idea would be to define that range by 40 and 50. However, the current levels here are more like 42, 43, and 52, 53, something like that. So we are still in that range here. And the fascinating thing, and we can switch now here to a daily chart, the fascinating thing here is that we had this OPEC session last week. And during this OPEC session, we had, the market was anticipating that production rates won't be cut, and therefore no price hike. OPEC cut the production rates, and we got the price hike, but you can see that price hike was pretty poor. Essentially, we are still staying here within our complete range. This high here is currently, at least in the futures contract, is a lower high compared to that one here, and we're still going sideways. This is still not really going anywhere, and for that reason, it's not that interesting. It's not that I'm not that thrilled about that market. Now let's make it again a little bit larger. If I see a setup like that one here, usually I should be interested. Let's forget about the left part of the screen. If I'm just seeing here a higher high, I'm seeing a higher low, I'm seeing another higher high, I see another higher low, clearly an uptrend. I can see the price has now started to pull back, and we are now very close here to our moving average buy zone. The 50 and the 200 haven't yet fallen into place, but let's just assume they should be there where they should be. And check the moving averages are a 10, 20, 50, and 200, and it doesn't matter if you use the simple or the exponential one. I think currently here I have the simple ones on my chart. On other charts I'm using the exponential one. Currently I'm using the exponential one more often than the others. Our recommendation is always try both types of moving averages, figure out what works best for you, and then stick with it. Obviously, I'm not practicing what I preach as I'm flipping between those two. In the end, it doesn't really matter. It's a matter of personal preference and personal choice, what you like best there. Experiment with both and then stay with them. I got this pullback here, very close to my moving average buy zone, and I'm getting a bullish candle setting up here. So that might be thought of very isolated here as a potential setup for our trend flow strategy. I'm definitely not interested to trade that setup here, and the main reason for that, apart from those moving averages not being there yet, is clearly that level. We are still stuck in that trading range, and I'm always thinking about the markets in that way. we are here in a trend. We are picking up speed. It's like you're speeding up your car and accelerating on the highway. And behind the next bend, there's a huge concrete wall, huge brick wall, whatever you prefer. And you're just speeding up to hit that wall. You don't want to do that. So as long as we have not yet here clearly touched that level and are then breaking above this level, clear sky above us, I'm not interested to trade this market for our strategies. However, that's just here, a setup here on the daily chart. There's still a little bit of wiggle room until we test this level once again. So now it's the idea that I say, wait a minute, if I'm going here now to lower time frames, and let's have a look at an hourly chart here, for example. We started to form a new fresh uptrend here on the hourly chart, and there's still quite a lot of price movement possible, candle size, hourly chart, until we hit this level. So why not look here for a trading opportunity on the hourly chart? Again, that's not a recommendation. It's just I want to show you guys something, how we could tackle that now. Definitely not a setup I'm personally looking into, and not a recommendation whatsoever. And my Windows 10 is screwing with me. Sorry. Now, here's the Nadex platform. Now I have decided in this virtual example, which is just for educational purpose, that we are about maybe to go higher. Now, how could I trade this anticipated move higher to test this level once again? So the first thing is I'm going to the Finder and I'm looking at commodities. And we can have a look at binaries. And we have crude oil here. And we have commodity spreads. And here we have crude oil as well. Now, again, whatever you want to pick here would just be your personal preference. My personal thinking, my personal reasoning would be, okay, if I want to, now, if I got my timing right, and obviously I'm based in Germany, so the time might be off. I think that contract might have still, this one is expiring pretty soon, so we will be not looking at that one, but we could be looking here at the weekly chart, weekly contract. That weekly contract still has 1 day left, so this might be just the sweet spot to think about, okay, price might be still going higher, and I want to look at if there's a trading opportunity there. Now, we are currently trading at 50.80 roundabout. So the idea could be now to say, okay, let's look at trading this contract here, the binary contract with a strike price of 51.25. Still a little bit above us, however, not as far away, so might be still reasonable that we will hit this price level. So if I click here on the offer price, I can see now that I could buy this contract right now for $37. My total risk for buying this contract would be $37, and in the event, or if the true event for this binary setup occurs, and the true event is that by tomorrow, 2:30, this contract or oil is trading above 51.25. Then my total profit would be $63. The only thing I have to worry about is, do I think that by this point in time, price will be above the strike price? And if that's the case, that's it. So that's my potential, again, not a recommendation, a potential trade where I think, why not, this could make sense. Buying this contract, I'm risking 37, my maximum profit is 63, so this is around about a 1.7, 1.8 to 1 reward to risk ratio, which is nice. I want this to be above 1. And the probability of that trade being in the money is something like 40%. 40% that this trade will be in the money. But that's just one way this potential long trade could be tackled. If I say, wait a minute, my level is up here very close to 52, 53, so why look at the 51.25? We could be looking at the 52.25 as well. So I could look at this contract here And if I was to buy that contract, I would just have to pay $17 right now, 16, 17. Once again, the risk, what I'm paying, let me go back. The payout of that binary contract will be 0 if price is below that level, or is above. If it's above the strike price, it will be 100. 0 or 100 doesn't mean a thing. It's one of it's either 0 or it's 100. No in between. No how deep in the money is it? How far out of the money? If it's above that level, payout. If it's below, no. In that case here, paying 17, that's my maximum loss. My maximum profit, 83. Obviously, much better reward to risk ratio, something like 4 plus, perfectly fine. However, the market is currently telling me from the mathematical statistical model underlying the pricing of those options, we currently see here about a 15–14% chance that this scenario might be true, that you will actually get your payout. So you have to balance the probability of hitting that level with your reward to risk ratio. That's one thing. Now, let's just assume that, and that's just personally me, I just have to focus now on that strike price, and that's it. So this is why I personally would start trading here with just binaries. But obviously spreads aren't bad or harmful or whatsoever. So let's have a look how we could trade this here with a spread. We are looking here now at a, and hopefully don't screw this up here. This is now, I think, pretty much bad timing. I would like to pretty much bad timing for that session because those spreads just have expired. However, let's just assume that spread would still be trading. Where is the market right now? We're trading at 50.86. My idea is that we might still try to test this level up here. So how would I take this for which spread would I pick? If you want to go long that spread, if you want to buy that spread, the general rule of thumb would be I want to buy a spread where the current market price is very close to the current floor level of the spread. For this spread here, the floor level had been 50.50 and the upper ceiling would have been 52. So the idea here would be, okay, I'm buying that spread and I'm just 30 cents in the money at that point. And so I could profit from any movement that this spread or that the market moves or market makes until we hit 52. So I'm entering at this floor level. I have all this headspace above me to participate on the move to 52, and only then I would be limited. So you see, the only additional thinking that you have to do when it comes to spreads is, where is my floor, where's my ceiling? If I want to go long, I want to enter probably as close to the floor as possible. If I want to go short, I probably want to go enter as close to the ceiling as possible. That's the only difference. Personal preference, you pick whatever you like best. So Chuck, I hope that answers that question. And David, great point. I'm seeing signs of a potential drop yet, especially with weekly profit takers on Friday. And Ron has a quick question in between. David, we will have a look at that in just a moment, and we're already 5 minutes over time. Sorry about that. Ron has asked, take profit. Sure enough, once you have opened that trade, and let's just jump in here again. Let's just assume that trade is open. You can definitely close that trade early on. That's the nice thing with those Nadex contracts. It's a position. You have a position with contracts, and you can trade into that position or trade out of that position. You can add to that position. You can close it early. You don't have to wait until expiry. Very, very powerful feature. And Ron, thanks for asking that question. You don't, let's just assume you have bought that contract here. You have paid now about 17 bucks for that contract, and the market starts to move in your direction, and it's trading now close to 52.25. How much would that contract be worth? Round about $50. How do I know? An option which is trading at the money has a delta of round about 0.5, and this delta is essentially the price of that binary. So that if it's trading at the money, if current market price, underlying price is at the strike price, price should be very, very close to 50. And for that reason, you would have taken that trade from about 17 to 50, which is on its own already 3-to-1 or more. Great trade. Why stick with that trade if you still have a few hours left where anything could go wrong? Nothing wrong with closing that position early on. Definitely a very viable strategy when trading those markets with binaries. Linda is asking, what is the order type when entering the market and when closing the trade? Think about it that way. You just have that open position here, and essentially that account is netting, which means if I have bought something 10 times, I'm buying now 10 contracts here of that trade, and I execute that trade, and then I have my position sitting there with 10 contracts. I can easily then just create a sell order for 5 contracts, and in the end, what is my net position? I'm still long than 5 trades. So you're just entering those trades, you're pushing in the trades, and the positions are just a net result of netting those trades that you did. So that's the way it works here. Linda, I hope that answers that question. All right. Yeah, guys, that has been just one example here now for gold. Sorry, for oil. My suggestion would be, I'm now just quickly switching over to the last slide that we have. If you are pressed for time, thank you very much for attending and for staying with us. I'm more than happy to stay online for those who have a few more minutes and look at gold and some other markets that you might be interested in. Essentially, now it's pretty much fair game, so any market that you want me to have a look at, I think the S&P 500 has been quite interesting over the last few days. Happy to do that. For those of you